Hong Kong Stablecoins ordinance came into effect on August 1st, making the special administrative region one of the first markets globally to regulate this virtual asset. After it was introduced, the city suddenly found itself in the cryptocurrency spotlight.
香港穩定幣條例今日正式生效。
穩定幣唔淨止係幣圈嘅興起。
Here in Hong Kong, the bill is set to go into effect.
的確，香港現在在跑步進場
to become the leading Asian center for cryptocurrency.
But controversies erupted.
Really see overheated discussions on stablecoin. This has exceeded, what we talk about in the Hong Kong's stablecoin bill.
They want to see how can they invest in the stablecoin, but stablecoin itself does not have the investment value.
The Hong Kong Monetary Authority published 2 documents to set out regulatory expectations for licensed stablecoin issuers. But some criticized the regulatory regime for being overly strict.
I think there is a risk that casual users, retail users, people who want to use them for DeFi and these other types of things will not be enticed into using the Hong Kong denominated stablecoins.
While how strict Hong Kong's regulatory framework is subject to debate, I think in the long run it's going to pay off.
Will the regulation of stablecoin be successful enough to help Hong Kong in its bid to become a digital asset hub? Unlike other volatile digital assets such as Bitcoin, stablecoins are a type of virtual asset that are designed to maintain a stable value relative to certain assets, typically fiat currencies. They can be utilized in various blockchain-based financial services and can even be used to make a cross-border remittance or to pay for goods and services.
I think you can think of stablecoins as like the plumbing which connects crypto and money. They are the lifeblood, effectively, of on-chain finance.
For stablecoins, I see the main use cases are in payments and also, for example, remittance. If a friend tried to send me money to pay for what I produce, it is a very fast and efficient way and also cost-effective way for transferring money across different countries. I can see the cost lowered by 80% or even more. And I can receive the money within minutes versus within days right now.
But don't be fooled by the name. The value of stablecoins can be unstable, especially in times when too many people are trying to redeem them. They are also vulnerable to payment systems risks and risks of scale. As an emerging virtual asset, stablecoins have also attracted bad actors and potentially create a breeding ground for scammers.
We see that as a very important mean when we develop the whole Web3 market to first legislate and regulate the stablecoin, because this is the gateway and also the major payment use product.
Under the regulatory regime, stablecoin issuers should have a minimum paid-up share capital of 25 million Hong Kong dollar and be 100% backed by high-quality liquid assets such as cash and short-term government bonds. Besides, this should allow users redeem their stablecoins at face value within 1 business day, while verifying all users' identities and keep them for at least 5 years. Unless the issuer can prove that their system is adequate for mitigating money laundering and terrorist financing risks, the use of decentralized finance scenarios and anonymous wallet access is prohibited. Just weeks before Hong Kong Stablecoins Ordinance went into effect, the US also passed its law regulating stablecoins, known as the Genius Act. Prior to that, the EU and Singapore have also established their own regulations on stablecoins.
When we talk about the areas where the Hong Kong regime is similar to what's happening elsewhere, it's the focus on reserves, having a clear licensing perimeter, making sure that there are very strong AML controls when it comes to issuance of stablecoins, redemption of stablecoins. These things, again, are sort of the commonality, and then there are areas where they are a little bit different. Hong Kong's regime is more prescriptive on AML than its peers. There is a very big focus on KYC and monitoring, as it requires ongoing monitoring of stablecoins in circulation, including robust monitoring of secondary transfers. And where those controls aren't demonstrably sufficient, the fallback position is to require the identification of every stablecoin holder, even non-customers.
Know your customer is the key controversy in Hong Kong's regime. Some have said that the overly strict regulation will dampen people's willingness to use Hong Kong dollar-linked stablecoins.
What we are looking at promoting stablecoin in Hong Kong is we are looking for a different market. We are actually not going to fight for the existing stablecoin users for a lot of the small payment settlement and cross-border settlement. Even if we loosen a bit our KYC requirement, maybe we still cannot compete with the existing products.
I think that the way the regime is drafted, it favors large organizations, and it's really focused on building trust, I think, and rapport, which is needed to attract more institutions.
In the first stage, we see it as a to-be application first because of the strong KYC requirements. A lot of the businesses can be adopted for first, remittance across the border. And second is basically for e-commerce. And that is already a very large market we can kick off.
So what Hong Kong are doing is we have to first address these users that are not enabled before with the stablecoin that has been issued. So I think we are going to set out an example in Hong Kong of what a regulated stablecoin can be used. And I'm sure there is a big community outside that will want a very clean, a very traceable, a very transparent, a very trusted stablecoin to be used by them.
The stablecoin transaction volume reportedly reached $18.6 trillion in 2024, surpassing that of Visa and MasterCard. Yet, even with the issuance of stablecoins in other economies, over 97% of stablecoins are US dollar denominated.
Current trends thus reinforce US dollar dominance. However, I think Hong Kong provides a counterbalance to this because the Hong Kong Stablecoin Ordinance, it's open to multi-currency stablecoins.
I do see that with the strength of Hong Kong being a first financial center, second with a very solid Hong Kong dollar economy already as a testing ground, these two things will set the stage for the Hong Kong dollar-backed stablecoin a success.
It's because the bar is so high in Hong Kong, those stablecoins will have a lot of trust. The market users can really trust stablecoins that are issued under the Hong Kong regime. So it really helps, I think, to shape the quality of alternatives. But fundamentally, that alone is not going to change demand. I mean, it's ultimately about user demand, right?
It will be very crucial in Belt and Road Initiative transaction. I think that Hong Kong's stablecoin ordinance does provide potential to tackle US dominance and also counterbalance to such measures.
As of September 30th, the HKMA has received stablecoin license applications from a total of 36 institutions. It is reported that the HKMA will issue the first batch of stablecoin license early next year. After that, we can expect to see Hong Kong dollar-denominated stablecoins in the market.
I think the number one thing we have to do now is to do public education, to let people understand, what we mean in the Web3 ecosystem that we're building up. Number two thing is we have to invest in technology because this whole thing is enabled by technology. And the technology is still evolving.
I think for people that are interested in participating in stablecoin, whether it's users or practitioners, we need to first of all understand the risk of operating or using a stablecoin. Try to avoid from non-licensed users and only stick with licensed users that are licensed by the HKMA.
Always, stay up to date with the market because crypto, digital assets, there's a lot of volatility and it moves very, very quickly.
Well, I think it's okay that Hong Kong, for the whole Web3 development, we take a step-by-step approach. The most important asset for Hong Kong is our reputation. Is that people believe in the system in Hong Kong. This is the number one thing Hong Kong has to always keep in mind.